Andy, good morning. 18% gain. Talk Anne-Marie, myself and the viewers through where did the spike in the business come through for you, and will you upgrade your growth for 2021 from flat? Good morning, Andy.
Good morning to you. Yes, I think we've had a good start to the year. We, as you say, had a significant increase in profitability, up 18%. The 1.4 billion is one of the biggest quarters profit-wise we've had for several years. A lot of that did come off the back, as you say, of significantly reduced credit impairment charges. So a charge of $20 million for the quarter, which compares with just over $2 billion for the whole of last year. So a very, very significant improvement in the credit portfolio performance. The income line was a fraction down, about 3%, but that was very much driven by the interest rate reductions that happened just after the first quarter last year. Yeah. So that will start to normalise as we move forwards. But yeah, we're very happy with the start of the year.
Andy, you're happy, you say it's significant. So do we have any visibility now on share buybacks and dividends?
So we will talk more about those when we come to the half year. We're obviously only one quarter of the way into the year so far. But as you've seen from the last couple of years, we have done a mixture of both buybacks and dividends. And to the extent that we have got surplus in the business, we will be very prepared to return that to shareholders. But we'll provide an update on that when we do the half-year results in a couple of months' time.
Andy, you guide us. Impairments have been reduced significantly. It automatically brings me to can I expect write-backs then, as we saw from HSBC? Is that the next logical step in this quarter? And if so, what size?
I think it's unlikely that we'll see big write-backs. We carry a relatively modest management overlay in the business, just over $300 million. And with COVID still being at large, as we well know in markets like India at the moment, we're going to be thoughtful about how we release that. So in the overall context of the bank, it's not a big number. I think it will reduce over a period of time. But we are very happy just to have low credit impairment charges, let alone releases. That is a much better position than many people thought we were going to be in at this time last year.
Yes.
Andy, you know India is really becoming a critical epicenter of the pandemic now, absolutely catastrophic and harrowing images coming out of there. To your business, what's the impact of that?
Well, we are also obviously very, very saddened to see what is happening there. We have got a lot of our people globally are actually based in India because we run both a business in India and we have a lot of our shared service activities in India. So we do have a lot of people there. We're obviously working with them to do whatever we can do to help. I think business-wise, it's not yet having a visible impact, but we are obviously monitoring it very, very, very carefully. And, we just hope that they can get that situation under control soon and that, that they can return back nearer to normality. But obviously very troubling as we speak.
Yeah, I mean, the images are harrowing. So no immediate business impact there. And you also got us very clear. You're going to reduce the branch network by 50% and you're going to reduce your office space by a third. Is that a minimum number that you're hoping to reduce your office space by? I think you said that you were hoping to save $100 million. Does that mean you're going to more now overall from branch closures and office space reduction?
Well, I think there are two sort of separate things. The investment we have made in digitalisation, the ability for people to now transact on their mobile phones. We have for the last several years been progressively reducing the number of physical branches we need because we can now service customers through alternative mechanisms. That process of reduction continues. We're about 800 branches today. We think over a period of time, we'll probably settle at about half that number. So it's a continuation of what we've done, but very much off the back of being able to focus upon digitalisation. On the office space, we have pushed very hard on the flexible working, asking people now that they have actually sampled life with more flexibility what they want to do. And a lot of people said we would love the flexibility to be able to spend 2 days in work, 3 days at home, 3 days at work, 2 days at home, whatever. That over a period of time clearly will have a less space requirement for what we historically called offices. And we do, as you say, and as we said today, we expect over a period of time that the overall office space we've got reduced probably by about a third. Now, the pace of that will be dependent upon lease clauses and lease breaks and lease renewals. But our vision is that over a period of time, we'll be operating off about a third less space than we are today, with a resultant cost saving that obviously goes with that.
Andy, as you look at life and banking post-pandemic, the Nordea CEO just told Manus and myself that he sees less business travel. HSBC is budgeting for half of business travel. How are you looking at that sector?
Well, we also, like HSBC, we run a very, very international business, and we have necessarily had a pretty high travel content for forever, really. I do think it will reduce. I think people have now realised that actually with other forms of communication, video conferencing particularly, it is possible to keep in touch without spending as much time travelling, that it's environmentally more friendly. So I think we will see a step change in the level, as in step change down in the level of travel once we normalise out of this because of the experience that we've had. I mean, we've run this bank for the last year with about 3/4 of our people on the average based at home. That is an extraordinarily high proportion, not one which we would have thought was feasible before the pandemic. We know it can be done. We don't want to operate at that level, but we know that we can actually work with more people being more flexible and suiting their own personal lifestyles.
Yeah, I mean, I've just come back from a CEO visit. I would put it to you that engaging and actually physically meeting people builds relationships. So we're all trading on backed up fumes of relationship. Let's talk about the pivot. HSBC are pivoting very squarely to Asia. And yet we hear from Bill at a conference, Bill Winters, saying actually the US and European. Why? Can I take it from you and Bill that you are looking at pivots to Europe and the US rather than to the East?
Well, at the core of our business, we are a very Asian bank. The vast majority of our income, the vast majority of our profitability comes from Asia, and that, long may that last. What Bill, I think, was referring to was the fact that we are probably a little underrepresented in Europe and the US, and that actually we'd like over a period of time to just boost that presence in those parts of the world. So it's not at all that we're not going to be focused on Asia. Quite the opposite. We'll continue to be very focused on Asia, but there is still opportunity, we think, both in Europe and the US to get ourselves better known and to get more share in those markets.
Few things going on right now in China. There's geopolitical tensions. There's also an incredibly competitive market. It is very, very hot right now in China and very competitive. Are those two things that you are worried about in that market?
Worried, I wouldn't say worried. I think that to the latter point, it may be competitive, but the growth opportunities that are still in China are significant, and it's difficult to see as many other parts of the world that look to be confidently growing as fast as China is. So actually, on the competitive front, we are very confident, and that, as I just said, is why we continue to invest very significantly into the Hong Kong-China area. The geopolitical, obviously, is more sensitive. We've been operating in these markets for 160 years, so we're well familiar with operating where there are different political views. But overall, we continue to do what we do best, which is service our customers. There is still very strong demand from our customers, and that is what we focus upon. And we think over a period of time, we will continue, as we have done over the recent years, to move the business very much forward in those parts of the world.
Andy, we've got 2 minutes left, and we've got two huge issues to deal with. One, are you looking at any of Citi's assets that are on the block in Asia, Indonesia, or Malaysia? Would you be a buyer of any of the Citi assets on the block?
So clearly, we will have a look at what they are potentially selling. There are a number of markets there where we operate in as well. And in many senses, banking is a scale game. So where there are opportunities to bulk up on scale, we will have a look at it. it's very early stages. We're awaiting detailed information. So when we have had a look at it, we will see where we go from then.
Andy, you've warned about low-rate environment impacting the business. Do you see inflation picking up? This is a huge debate right now, whether or not it's transitory or going to be persistent, and thus increasing the rise inevitably in rates?
So our sense is that near term we'll see inflation, at least in the numbers, but largely off a base that obviously was very unusual last year. Thereafter, we are more of the view that it will be a modest increase rather than anything sort of substantial, but that should be supportive direction of travel in interest rates gently rising over a period of time. That will be good for the sector, it'll be good for us. It is easier to make money when there is higher interest rates. So I think the direction of travel is that we would expect it to rise over a period of time, not immediately, but over a period of time. We'd see that as being where things will end up.
Andy, do you think that we get a taper by the fourth quarter? Is that what you're penciling in, and still a rate hike? Are you putting forward your view on rate hikes in the United States of America at all from 2023?
We think where we're at the moment is probably where things will settle for a few months now. Clearly, the US economy is doing well, which is good and good for the world at large. We all know that globally, back to the point earlier, that there are still pockets of the world and parts of the world where there are still some extremely challenging conditions. And therefore, I think being a very global world that we live in, there will have to be a degree of recognition of the fact that different countries are moving at different paces at the moment. So we would expect that the situation we see today will not change vastly over the coming months.